A success story with significant gaps in key performance parameters, Responsive Industries Limited. Highly experienced promoters, a strong and well-diversified product mix, up-to-date technology and adequate capacity, an efficient marketing network for an effective domestic and global reach. Consolidated revenue crosses the threshold of 1,000 crores in FY24. Profit jumps over 6 times. Overwhelming profits from overseas subsidiaries contributing beyond 80% of the group. Profit after tax percentage takes a big leap, goes double digit, now close to 15%. Standalone revenue has a small fall over previous year, but profit more than doubles with a superior profit after tax percentage. The increase in profit is evident in substantial savings in cost as related to a small fall in the revenue. Standalone shines, of course, with a concern for revenue fall. Revenue of subsidiary up by over 40%, but profits during the period go up by almost 10 times. Profitability improves phenomenally. Incremental revenue moves almost in full into profits, possibly due to abnormal increase in realization. Just too good to be true, quite unbelievable. Serious quality concerns on receivables as a substantial part of annual sales is appearing as year-end receivables from overseas subsidiaries, likely to be stressful and risky unless there is a quality check on the dues from debtors. Almost the entire operational surplus from overseas operations is exhausted by the rising inventory levels and bulging receivables. The quality of current assets is quite crucial for a rightful risk perception of overseas operations. The average return on capital employed for 4 years up to FY23 is a meager 4%, quite unrewarding. But FY24 with exceptionally high profits takes ROCE to an all-time high. But concerns are stability and consistency in earnings to ensure continuity of higher ROCE. Rising total assets, fully supported by growing equity. Zero debt is an additional strength of the company, but rising payables are equally worrisome. Quite huge and consistent promoter holding, very concentrated shareholding by the FDI. Quite perplexing is the total absence of mutual funds, a real matter for grave concern. With continuous up move in market prices, investment in responsive industries was nicely rewarded, particularly during the 12 months up until last year. Subsequently, crash from the peak has rendered investment returns quite poor and ending up in negative. Rising profits and falling prices during the last 12 months have made PE multiple shift downwards close to multi-year median PE multiple, but being fundamentally costlier compared to its peers, the share continues to remain highly priced. Quite evident from price action data for the last 3 months. Quantity and price both moving below 100 days average. Sideways movement continues with no major change in the momentum. For over an year now, price is confined to a fixed channel, continues inside the descending channel, at times attempting to breach the lower boundary of the channel. Three unique features: unidirectional move, consistent incline, and continuity in erosion. Weekly chart price candles quite suggest you below the midline with evident bias towards lower end of Bollinger Band. The relationship between domestic sales and exports has undergone a significant change. Exports have overtaken in growth rate by far. Domestic sale is stagnating despite assertions in the guidance to the contrary. Management emphasis on consolidated debtor days instead of entity-wise receivables is quite misplaced and deceptive. Sizable and voluminous subsidiary debtors reflect risky reality of dangerously high debtor days in the books of overseas subsidiaries. Revenue guidance based on a target of 32% CAGR is not borne out by existing price volume relationship. It is more of rhetoric and is far removed from reality. Quite exceptional operational results in FY24 at the group level, but worrisome is the rhetorical guidance on revenue and profitability in the near future. Serious concerns evident on quality of overseas receivables. Hope you very much liked the presentation on responsive industries. I am Vittal Prabhu with the weekly video on Stock Learning Simplified. You can access similar videos at our info card on Stock Learning Simplified. We look forward to your likes, shares and comments. If you are new to the channel, may please subscribe and press the bell icon for timely intimation on our forthcoming videos. For your valuable time and kind support, highly obliged. This video is for purposes of information, education and awareness only. This is not meant to be a solicitation or recommendation to buy, sell or hold securities. Wherever applicable, please seek the advice of a competent professional before taking action of any kind.